Vincenzo'S Go Crypto Investing this August the 14th, 2025, noontime cryptocurrency and blockchain technology goals and still bullion update. And as you look here at some important news today, finally, as the crypto Bitcoin is down $5,000 or 4%. Ethereum is coming off of its record high. I believe it hit a record high. And it was down about 3% today, and across the board, 6 to 10%. And at the same time, 215. We'll read that one next. The one I wanted to see first. U.S. Treasury Strategic Bastion says government won't buy Bitcoin for a strategic reserve, but will retain seized assets as crypto. So that's very important. And then this is the article that caught my attention the most. 215 billion corporate Bitcoin boom creates dangerous game most won't survive credit cycle research. Corporate Bitcoin holdings have exploded 215% across 213 entities, with public companies controlling 71.4% of the total. But new research warns the dangerous game will likely see most participants fail to survive a full credit cycle, according to research from Centura shared by crypto news companies and echoed by Vincenzo'S Go Crypto Investing for the last several months about what's going on here with major players trying to borrow money to become corporate Bitcoin ETFs, borrowing big billions in fiat, issuing new equity, and restructuring entire balance sheets to acquire Bitcoin while engaging in what amounts to structured speculation on a non-yielding, most importantly, high volatile digital asset. The study identifies a critical flaw in the strategy. Idle Bitcoin on a corporate balance sheet is not a scalable strategy in a rising rate world because most Bitcoin treasury companies are either unprofitable or heavily reliant on mark-to-market gains to appear solvent source. Centura Research. Strategy leads with 628,791 Bitcoin, followed by Mara Holdings at 50,000 and Bitcoin Standard Treasury Company with 30,000 plus. Notable Japan MetaPlanet's recent Q2 financial report revealed a stunning 468% Bitcoin yield in Q2. Speaking of crypto news, Vincent Malapard, Vice President of Marketing at Centura, noted that balance sheet diversification with a hard asset like Bitcoin is the right framing, especially in an era of heightened geopolitical uncertainty. However, the research warned, without Bitcoin evolving from a digital property to producing digital capital that generates yield, the strategy remains fundamentally limited. Historical parallels reveal both promise and peril. The research emphasized that here's stuff that they went on to say. Research noted while familiar in families and companies build generational wealth through real estate for centuries, gold treasury companies never emerged despite gold scarcity due to storage costs, movement difficulty, and negative carry. Bitcoin digital adventure enables global transfer in seconds, programmable custody, and 24/7 trading. However, research emphasized, like land that gains economic meaning when developed, Bitcoin must do something beyond existing as idle digital property on a balance sheet. Study warns Bitcoin treasury adopters from 2020 to 2024 misunderstood the asset, the structure of the macroeconomic during an era of cheap fiat and QE-based equities. The transition to higher rates exposed structural weaknesses in strategies designed for ultra-low rate environments, leveraged speculation disguised as treasury management. The research categorized Bitcoin treasuries as negative carry trends where companies borrow fiat to acquire a non-yielding asset, contrasting sharply with traditional carry trades that provide a positive yield while waiting. Unlike foreign exchange carry trades with built-in cushions, Bitcoin strategy offer no yield cushion, no neutral carry, and no risk party ballast. Strategies has pioneered the model with 3.7 billion in ultra-low coupon converted bonds, 5.5 billion in preferred shares to financial traders trades at a premium. Bitcoin, the financial merchant, reveals structural value vulnerability. Mining companies like Marathon Digital face razor thin and deteriorating margins, often being unprofitable below 100K. Similarly, MetaPlanet also amplifies this aggressive accumulation, doubling Bitcoin holdings every 60 days using zero interest convertible bonds. The company filed shelf registration for 550 billion, whatever their shit is, money there. Preferred shares targeting 210,000 Bitcoin by 2027. Rising interest rates, ample negative carry. The study notes there is no lender of last resort, no circuit breaker, and no reinforcing facility when Bitcoin carry trades break, making risk binary and reflective. However, the company maintains unique advantage, blah, blah, blah. So that's something very interesting that's going on. That's what we're going to watch over the coming years. If anything, the next time an extended bear market happens, do any of these companies that are publicly traded that borrowed against their own stock to buy Bitcoin, if anything bad happens to them? We got to move this along, though. We're going to look at what's going on. You can see the Bitcoin hit a new all-time high, and as quickly, like usual, when it breaks a new all-time high, it usually has a reversal, and it absolutely is having a reversal. You can see from the 124,000 and change high, we went down so far 5%. And if we break down again the 50-day moving average and then the 100-day moving average, or the uptrending support in the daily time frame where you're underneath support, obviously your major underneath support is the pattern 3.5-year rising channel, which is sitting just below the 100-day moving average, sitting at $108,707 and uptrending. And if that broke, the 97,000 comes into play, but that's for another time on a different day, because right now we're still about $4,000 above the 50-day moving average. You would think now we would get some kind of local support after a 5% fall, so we'll have to wait and see. But just so you know, the upside target is 140 to 155,000 if it does want to break up. Underneath, you have three major areas of support: the 50, the 100, which is the same as the uptrending rising channel, and then your major pattern support, to where if you broke the 97,000, that would be a major short and medium term ultra bearish signal, right? So that'd be something that would be watching out for. But you would have to break the uptrending rising channel first, and right now we're not showing any signs of that. We're showing signs of being bullish still. So we're going to have to see. Ethereum had a big correction, just shy, I believe, of the all-time high. And now if this correction continues, where you would expect to go with the megaphone neckline support now, because it used to be a 3-year resistance, down there at 4,051, and that would be bullish, even if it came all the way back down like that, because that would be where you tag, and then you move back up to the upside, similarly to how you did it right here, where you were just below the megaphone neckline resistance at the time, tagged the major underneath support at 34.98, and then you kicked off to the new regional high in a big, big move from the consolidation. So that's what we're looking at. You have a major underneath support at 4,051, and then if you break to 4,833, your technical target on the megaphone pattern is not up there, is $10,000 and change. For any reason, if you broke the megaphone neckline support, you'd be looking at a $3,498 as major underneath support, which is the bottom part of the screen, support and resistance box. But right now, that's a lot of work to have to do to get down there. Your major support is the megaphone neckline support at 4,000, and it is in red. There, if we look at XLM, the same thing. You had a drastic, phenomenal flush, and it looks like an M topping or a mountain local regional double top, and now you're below the 43 cents. So now you're short-term bearish, just like that. And now what you're looking at, if you don't get any buyers, the 50-day moving average, and then once again another retest at 35 cents, and then that would be a question of, would you hold at 35 cents, or would you have to come down to the 100-day moving average now, right? So now we're all of a sudden short-term bearish, and we have to look at these underneath targets. If you want to avert this, you got to get back on top of this 43 cents, but right now you're below it. So right now, the underneath targets are going to want to act like a magnet, the 38 and the 35, but if you can get back on top of the 43, then obviously the 55 comes back into play. The XRP is the same thing. You're now wicked all the way down to the 50-day moving average at 291, quickly came back up this morning, and now you've collapsed just below the critical 307. So now you've all of a sudden flipped the short-term bearish because you're below the 307, and if you stay below the 307, you're going to have to look at another run down to the 100-day moving average, and then maybe potentially as far down as the $2.55. Those are what would act as a magnet if you're below the 307. And right now, you are below it ever so slightly, but you are, yes, bell notification, you are below that. Become asset millionaires by joining Jabroni Killers and supporting the channel with daily videos every day for as cheap and as low, starting at $3.99 a month to help support the channel and get educated in the information and the knowledge that you need to become an asset millionaire like I'm on my mission and goal between gold and silver bullion and mining stocks, 401k steady investing, cryptocurrencies, real estate, cash on the side earning 3 to 5% in CDs or bonds for peace of mind or emergencies such as needing a new roof, car repairs, or medical bills, as well as identifying and spotting and being able to buy a new or accumulating into, just as importantly, into an existing asset, right? And that's what we're here to do, and it's about all the bell notifications, right? But right now, the Bitcoin, the Ethereum, the XRP, and the XLM have flipped the short-term bearish, and right now, XRP is just below that 307, and even though in 2022 we have some big target, or 2026, excuse me, we have some big targets, right now we're still in 2025, and there could be some underneath targets that have to get hit, but as long as you're below that critical level, these targets right here are going to act like a magnet. The 268, the 255, and the 241 will act like a magnet, just the same as if you stay above the 307, the 366 wants to act like a magnet, and that's something that's very critical, and we're going to continue to pay attention here in the XRP price. Bell notification, peace and love, the rock eyebrow, Jay.